Hey everyone, it's Kathleen with BK Forex. The financial system and markets have had their fair share of panic attacks in recent years. Remember COVID and the 2008 financial crisis? Volatility went through the roof as these nail-biting events drove the US economy into recession. Traders and investors were rightfully nervous because we lost banking giants like Washington Mutual, Lehman Brothers, and Bear Stearns, along with 300 other smaller banks between 2008 and 2010. And during COVID, hundreds of thousands of small businesses shuttered. Volatile markets are tough for investors who mostly watch their investment accounts and retirement funds evaporate. But as traders, we have the opportunity to turn volatility into opportunity and panic into profits. I've been trading since 1999, and I not only survived but thrived in high volatility environments. Here's how you can do the same. Number one, trade like a ninja. In high volatility markets, you need to trade like a ninja. That means being in and out of your trades quickly. You need to be able to anticipate market movements and be ready to pounce on the opportunities. This is how I avoided losses and made more than 200 pips this week. I anticipated that there was going to be more than one cockroach in the kitchen and pounced onto short dollar-yen trade. CAD-yen, Kiwi-yen trades at the Asia Open on Sunday when the headlines of Signature Bank's failure hit the wires. But I also was in and out quickly because the greatest risk with seismic level events like these are comments from regulators, which could hit the wires at any time and reverse the moves swiftly. Number two, stay with the trend and stick with your strategy. When the crisis of confidence hits, it's tough to turn the tide of negative sentiment. Investors become skeptical and worry that things will worsen. It becomes very challenging to reverse the negative sentiment, even if governments sweep in to save the day. In the case of the banking crisis, the bailouts are targeted at very specific institutions, but investors have deep-seated concerns about the sector as a whole and worries about their own banks and whether or not they should keep their money there. As traders, we can use this market psychology to our advantage. Until investor sentiment truly shifts, and that will take time, stay bearish, stick with the short trades, but wait for your trading strategy to flash a sell signal before jumping into a short trade. That's what we did on Friday. Even after U.S. regulators bailed out SVB and Signature Bank, even after the Swiss National Bank extended a $50 billion lifeline to Credit Suisse, and even after 11 banks deposited an unprecedented $30 billion into First Republic, I didn't believe that the banking sector troubles were behind us. So at the beginning of the New York session on Friday, I saw the stock futures were trading lower, bond yields were trading lower, and my ZIP strategy had a sell signal in dollar-yen. So I jumped into the trade. We sold dollar-yen at 133.15, and it went down more than 100 pips in less than 2 hours. The lesson here is to stay with the trend and stick with your strategy. Number three, always use a stop. In highly volatile markets, be patient with your trades and always use a stop. I find that there's a lot more back and forth in price action before we get the real move, so you can't let your conviction waver too quickly. Also, always use a stop. That's a hard, fast rule I have with any trade, but takes on a whole new level of importance during a banking or financial market crisis. You can never predict the timing of government action or comments from central bank officials or other officials, and you can never predict a rescue or another bank failure. Using a stop caps your risk and lets you return to the market and make back the pips as sentiment shifts your way. Revenge trading is always a bad idea. But if the tide turns, your strategy will as well. So just wait for the fresh signal to take on a new trade, and use a stop helps you protect your capital so you can trade another day. My goal is to make steady and consistent gains in low volatility and high volatility environments. And that means knowing what to trade, when to trade, and how to trade it. We're up more than 300 pips this month, setting the stage for the 11th out of 12 positive month. We lost money in February, but the losses were small and controlled. If you want to learn more about my ZIP strategy or how to get my trade ideas, there's a special discount link in the description of this video. Don't forget to subscribe to my channel and hit the alarm bell for notifications. Good luck trading!